Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings so you don't have to. Today we're diving into a Form 8K filed by B. Riley Financial, and let me tell you, it's a bit of a mixed bag. It's like they're trying to tell a story where everything's fine while their house is slowly burning down. Think of it as a financial roller coaster with a few unexpected loop-de-loops. We're going to break down what's really going on. This Form 8K is a current report, meaning it's used to announce big events that could affect investors. Think of it as a corporate bat signal, but instead of Batman, it's usually something less exciting. Today, it's a mix of goodbyes and O's. B. Riley Financial Inc. is the company we're looking at. They're in the financial services business, which basically means they help other companies with their money. Now let's see what news they had to share. First up, we have what's called a material impairment. In plain English, this means they had to write down the value of some of their assets because they're not worth as much as they thought. This section is all about Nogan Commerce LLC, which is basically an online business. B. Riley says Nogan had trouble growing as planned, which hurt their operating results, or how well they were doing in business. Because of this, the company decided that the value of Nogan's assets, such as goodwill and other intangible things, needed to be lowered. They originally thought this would cost them between $73 million and $79 million tangible things needed to be lowered. They originally thought this would cost them between $73 million and $79 million. But wait, there's a slight adjustment. The company now believes the charges will be between $68 million and $74 million. Okay, that's still a lot of money. But hey, at least it's a little less than they initially thought, right? This is a big write-down. Imagine buying a house for $500K and then realizing it's only worth $430K. Not fun. But it gets worse. Nogan signed what's called a deed of assignment for the benefit of creditors. This basically means Nogan handed over all its stuff to someone else who will try to sell it off to pay off Nogan's debts. The company won't own Nogan anymore, and Nogan's results won't be included in the company's reports after March. The company says Nogan's assets were worth about $9 million's debts. The company won't own Nogan anymore, and Nogan's results won't be included in the company's reports after March. The company says Nogan's assets were worth about $9 million's debts at the end of last year. Next, we have a notice of delisting. This isn't good. Basically, the Nasdaq stock market sent the company a letter saying they're in trouble because they didn't file their annual report on time. The company didn't follow Nasdaq listing rule 5250 Sec 1, which says companies have to file their financial reports with the government on time. The company has 60 days to submit a plan to get back on track. If Nasdaq accepts the plan, they might give the company until late September to file the report. For now, this doesn't immediately affect the company's stock being listed on Nasdaq. The company says they're working hard to finish the annual report and file it as soon as they can. Basically, they're trying to clean up the mess and get back in Nasdaq's good graces. They even issued a press release about this, trying to put a positive spin on things. Now let's talk about something a little more positive, or at least less negative. The company sold part of its wealth management business to Stifel Financial Corp. The sale brought in $26 million in cash. The company got less money than they expected, which was between $27 million to $35 million in cash, because the final amount depended on how many advisors joined Stifel. It involved 36 financial advisors and about $4 billion in managed accounts. Even after the sale, the company still has about 240 financial advisors and about $15 billion in assets under management. So they're still in the wealth management game, just a little smaller. We also have the usual list of exhibits, which are just documents attached to the report. Here's the press release about the Nasdaq notice. Companies usually try to make these press releases sound as reassuring as possible, even when things are a bit shaky. So what's the real story here? B. Riley Financial seems to be going through a rough patch. The Nogan Commerce situation is a clear setback, and the Nasdaq notice is definitely not a good look. On the plus side, they did manage to sell part of their wealth management business, which brought in some much needed cash. The company seems to be facing some serious headwinds. The impairment charges related to Nogan indicate poor investment decisions or an overvaluation of assets. This is not a one-time event but a recurring problem, suggesting deeper issues with the company's ability to accurately assess and manage its investments. The delay in filing the annual report and the subsequent notice from Nasdaq raises concerns about the company's internal controls and financial reporting processes. It suggests potential operational inefficiencies or, worse, attempts to conceal unfavorable information. A well-managed company should be able to meet its filing deadlines and makes the circumstances are really unexpected. The sale of a portion of the wealth management business while providing immediate cash also reflects a strategic shift. Is the company simplifying its operations to focus on core competencies? Or is it shedding assets to address immediate financial needs? The fact that the final consideration was lower than initially anticipated suggests that the company might have been under pressure to complete the sale, possibly accepting less favourable terms. Overall, the company's direction is uncertain. The company is trying to streamline its operations and improve its financial positions. However, there are notable risks. The company needs to address the issues with its financial reporting and improve its investment decisions. If the company doesn't fix these issues, it could face further financial difficulties. In conclusion, this 8K paints a picture of a company that is facing significant challenges, particularly with Nojin commerce and financial reporting. The sale of part of the wealth management business provides some relief, but the company needs to address its underlying problems to regain investor confidence. It is important to note that this is just one snapshot in time and the company's performance could change in the future. Thanks for watching. If you found this breakdown helpful, don't forget to like, comment, and subscribe for more Corporate Decoder deep dives. What companies would you like us to decode next? Let us know in the comments.